you can see that on a technical basis right here, this is where it has found that resistance at around $35. If it does pop, the upper level I'm looking at is going to be about $41, $42. For it to reach $50 is a tremendously large move when we compare that.
Mm-hmm. Gold is trading in record territory once again, this time holding above $3,100 an ounce on the spot side and on track for its best quarter since 1986, up around 19% year to date. Welcome back to Kitco News, everyone. I'm Jeremy Safran. Meanwhile, June COMEX gold futures hitting a new all-time high as well of $31.62 an ounce, and silver is also pressing multi-year highs near $35. Now, adding to this, Goldman Sachs is saying there's a chance gold can surpass $4,500 an ounce within the next 12 months if we continue to see these extreme market conditions. With safe haven investment demand rising, ETF inflows surging, and new tariffs set to hit this week, the technicals are front and center. Joining us now with the charts and what comes next is our good friend Gary Wagner. He's good to see you, Gary. Been way too long.
Great to be here. It's been a while, but this is an exciting day to record a show. No doubt we are making history as we speak. It's been phenomenal. When you said we had year-to-date 19%, 10% of that's this month.
Yeah.
Gold has accelerated in terms of the pace and the magnitudes of the price move. Exceptional performance, yes.
Yeah. So I want to shift over a little bit to silver, because year-to-date silver's actually outpaced gold. I mean, it's up nearly 18, 20%. It's run into resistance around $34.50, that $35 zone. But now there's this noise. I'm not sure if you've heard about it, Gary, but it's called Silver Squeeze 2.0. And, it's talking about supply and demand. Is there any evidence of the charts that supports a breakout, move that's mid to high 40, or are we going to be retesting 2011 highs? What are your thoughts here?
Well, let's take a look. We're looking at a weekly chart. Each candle represents a week, and we can go back. We had the one spike. If we look back when gold hit an all-time record high, this is 2011, and gold goes to $50 in futures, so it's a little bit over there. Multi-year correction, just like gold. But then something interesting happened. It went under more pressure than gold. And then we traded, here we go down to 17 and it trades to 32. If you look at the tops recently, and this is years 2020, 21, 23, 24, and 25, we really had a top, what we call technical resistance, at about $32. Then it broke past that, and we formed a series of tops right shy of $35. So the question is, why is it reacting differently than gold? Gold has made multiple new all-time record highs. Silver has made none. Mm-hmm. Zero. And so when I look at this chart, I realize there's plenty of room to the upside. But when we look at silver, it is a precious metal. I kind of call it a semi-precious metal, but it's an industrial metal also. The largest application in silver is in technology. And if U.S. equities and global equities that use silver to produce their products, if their production, their capacity remains the same, but if they're not selling the same amount, if they're not growing in the same cycle, they're not using as much silver. And so because it is so deeply tied to industrial use, it's going to be harder for it to break out. You can see that on a technical basis right here, this is where it has found that resistance at around $35. If it does pop, the upper level I'm looking at is going to be about $41, $42. For it to reach $50 is a tremendously large move when we compare that to what we've seen in gold, just in terms of percentage moves. So it's not that it's not as exciting, but it has performed very well. But relative to what? The performance is after it hit a low in 2020 of 17, so it has doubled. but it still has never even challenged or tested the all-time record high at around $45 and $50. And that differentiates itself against gold, whereas gold, we've seen multiple all-time record highs. Gold has shot up tremendously, continues to do so. And silver, in terms of percentages, when you're looking at a commodity at $25, a move from 25 to 30 in terms of that percentage move, the $5 is a much larger percentage than if gold moves $5, sitting in the 3,000s. And so the percentage numbers are huge, but it's really playing catch up and has not done that. Silver has moved out of the high correlation between dollar for dollar percentage gains. It has outperformed gold in terms of percentages, but it's because it was so undervalued going into 2020, 2021, and 2022. I think the upper levels are $41. And if that happens, I think we're going to be looking at gold at as I said, 3,500, 3,400.
Yeah.
So it's definitely marching to a different drumbeat.
Yeah, I hear you on that. What a time, Gary. What a time. I appreciate it, as always. Gary Wagner is, of course, the editor of thegoldforecast.com. You should be checking that out, specifically with this price action happening now. Thanks for joining us from Hawaii. I'm envious of your warm weather over there, my friend, but we'll see you soon.
We will see you soon. Thanks for having me. And to all of our viewers, performance in gold is stellar. Don't knock it. It's really something everyone needs to allocate a percentage of their portfolio. What percentage is up to you and whoever handles your money. But realize, to not have any portion of your overall savings in gold, honestly, from my heart, is an absolute mistake. Everyone should allocate a percentage of their portfolio, of their money, in something that's going to provide them upside potential and, more importantly, safety when other things are shaky.